Welcome back, everyone. This week we'll be talking about the weekly performance report and what's going on. So, didn't do any trades last week, so everything is pretty much where it was. A few percentage points up or down. What I want to talk about is the volatility and fluctuations that are occurring in the market, which is kind of interesting because if you're a long-term investor, it doesn't matter, so why should you pay much attention? And, well, that's what we are, so the other situations don't really matter. But big moves are made up of small moves, so a month of investing is made up of a bunch of individual days. So, for instance, Decibel stock I'm now down 19.93% on, and last week I think I was down 40% on. The volatility, them and Rubicon Organics both reported earnings. Rubicon, it's fascinating. Like, they report earnings, then it's down 8%, and then the next day it's up 8%. So what happened was it reported earnings, and then in a 24 to 48 hour window, it went down 8% and then up 8%, and ended up pretty much in the same spot that it started off. And that's always interesting to observe. And then Kinross Gold. I'm now up 99% on that. As those who pay attention will know, it was the second stock of mine to hit the celebratory 100% return threshold, and then it proceeded to almost immediately give back like 30%, and then now it's back up to, we'll call it 100%. So it ran up like 70% in a few months, and then it pulled back 30%, and now it's up 30%, and it's like, okay, that's cool. And then Glass House, ticker symbol GLASF, another beautiful example of just the year-to-date volatility on that, and just on it goes. And what's interesting is you get all these massive moves, and it'd be nice in hindsight, or just to be skillful enough to trade around the volatility, because like Grown Rogue has bounced between, let's call it 58 cents and 64 to 65 cents, I believe 3 times now in the last, month and a half, something like that. So 58 cents to 65 cents is 7 cents. And I mean, we're talking 10% moves roughly, let's call it. And that's not counting, that's the close, not the intraday swings. So if a person was able to, they could have traded around this multiple times and made multiple percentage points of gains, theoretically, in a short time period. And that's many of my names. They're just volatile, but they're not going anywhere. They're range bound. And it's frustrating, but things frustrate one whose expectations are in a fashion that would allow them to get frustrated. So it'd be nice if these things were volatile, but up and to the right, and some of them are, such as Kinross Gold, let's say, or Tidewater, up 68% on that, or Kodiak Gas Services, up 47% on that. On and on it goes. And at the end of the day, it really doesn't matter, though. It's like if you buy Grown Rogue because you think it's cheap and you think that the industry is inflecting and you think they're doing a good job doing what they're doing, then over the next following quarters, the stock should be higher than it is now, and the end. And when the stock is moving 20% because of the yen carry trade being the seeming culprit for the market volatility there not too long ago, it's like, what's the point of the day-to-day watching and observing? And I mean, get you all excited, and if you have some cash to deploy, so be it. But is just a bunch of noise. And sometimes I get caught up in that noise and I'm like, how frustrating. You see all these big moves and then it gains a bunch and it gives it back and it can really mess with your emotions. It doesn't mess with my emotions too much. I mean, if it did, I'd probably sell them or not have such concentrated positions. So behaviorally, it sounds like, well, why are you talking about it so much if it doesn't bother you? And the answer is because it bothers a lot of people. And I'm here talking to a lot of people, or a few people, however many people watch my videos. And it doesn't matter. And it took me a while to, I guess, come to terms with that from a behavioral perspective. On an intellectual, abstract level, I've known this since the beginning, but for whatever the reason, things take time and experience and things play out. And it's like, okay, like Valeris, that's a frustrating position, down almost 6%, been in that name for, call it, a year and a half. Like, wow. I was never one of these oil to $200, whatever the narrative and pump was. Never been that person. I've always been, it'd be nice if it stays range bound between 70 and 90. Offshore seems to have these long cycle investments. I've made videos about it before, and it's like, it just seems like a slow and steady grind. And every few quarters, you look back, it'll be hopefully higher than than back then. And well, that's not really worked out because let's say 3 quarters, I've been invested in it for 6 quarters, then that's twice now I've looked back and thought that I'd be higher than what it was 3 quarters ago, 9 months, and the answer is no. So that's been dead money. And then Sibanye Stillwater, that's like down 6%. And like I don't care. There's all these Twitter personalities, which brings me to the second point of going on a tangent. It's amazing to see the nonsensical garbage that occurs. Like, people feel the need to pontificate and give their opinion on matters. And the problem with that is the more often you give your opinion, the more times you'll be wrong. Even, let's just say you're right 99% of the time. If you give your opinion 100 times, you'll be wrong once. Then if you give your opinion 1,000 times, you'll be wrong 10 times. And the problem with that is people seem to remember those wrongs and less so the rights. It's the whole Albert Einstein. He writes 10 basic math problems. 9 times 9 is 81. 8 plus 8 is 16. And then he does 9 times 10 equals 91. And then everybody, this is probably one of those apocryphal stories that never happened, but maybe it happened, I don't know. And everybody attributes many things to Albert Einstein that aren't his. So who knows if that's accurate either. But all the students then point out, you got that one wrong. And he's like, look, isn't this interesting? I got 9 out of the 10 correct with a 90% success rate, and here you are criticizing the one I got wrong. So it's important to be mindful of that, the negativity bias and how we're skewed towards that. But my point is people are always feeling the need to give their opinion. And it's interesting because the people I follow, let's say, I kind of look at friends or associates, and if I was at the office, I'm like, hey, and I said, hey man, what do you think about the stock market being down 3%? What do you think's doing that? And then they'll talk about the yin carry trade and pontificate and explain or give their opinion or whatever it is. And it's like, okay, cool, thanks man, I appreciate that. Now, what Twitter is that person doing that without perhaps being asked by me explicitly or anyone explicitly. Like, I'm sure some people are wondering what's happening and wonder what my opinion is. Let me just provide it for them. And then if they have any follow-up questions, okay. And fair enough. But time and time again, like, people really want the market to fall in this, I don't know, it's like a evil-hearted kind of fashion. Like, they want those people, whoever they are, to get their comeuppance and suffer. And it's perverted, and I'm not sure, like, yeah, that's what Mag 7 gets. I remember people calling for Mag 7 being over, and then all the people pointing to Jensen signing that lady's t-shirt on her breasts, and then not signing her breasts, he was signing a shirt, and the shirt got signed across the breast region. And so signing breasts and signing a shirt that's on a woman with breasts, not exactly the same thing, but I get it. But, hyperbole, why not? And there's been quite a good bounce since then. Pretty much when everybody was like, I told you, I knew that was the top, blah, 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 things have bounced. Now maybe it's a dead cat bounce and the stuff falls another 60%. I struggle myself, like, well, if semiconductors are normally a 5 or 6 quarter cycle, and all this capex spinning, obviously it's a big capex cycle. Is it going to go on? And it doesn't seem obvious to me what the return on capital of these chips is going to be. And then at some point, maybe we're in a recession. If the SOM rule got triggered, so they'll be cutting back. So it's only a matter of time. And then this is just another bubble. And like, I get it, but you don't see me on Twitter talking about it, or really talking about it much here. I talk about what I talk about, and that's not one of the things I talk about. It's not a trade I'm invested in, or trading, or really anything. But people are fixated and obsessed on it. And so back to the volatility. Many people talk about, yeah, this is I don't know how many trillions of dollar unwind trade, and how the yen carry trade help inflate the Mag 7, and therefore the Mag 7 is going to radically and aggressively unwind, and this and that. And we've pretty much have, since all that happened, erased much of the losses that occurred since that big drop and that big scary moment. And let's see, the Nikkei I'm looking up right now, since everybody manufactured their indignation and got all their emotional riles going, the Nikkei is now up 20%. Yeah, I'm looking at it right now. So it's up 20%, which is roughly 3% lower than the big drop. And they talked about, I guess JP Morgan came out with something about how like 80% of that unwind has already occurred, trying to assuage the insecurities of the markets. And then people would say, yeah, I'm sure it did. Wink, wink, LOL. Like, there's more pain to come. Like, sure, there's always next week and the week after. I mean, sure, why not? But now it's been 2 weeks, I think. So what happened to all that? All this conviction. And the problem is people follow them, and then this is why it's never investment advice, and consult your own financial person, because some of the people I follow have said things and say, oh yeah, this is just the beginning and blah, blah, blah. And it's very important to remember who these people are. Remember the whole copper trade? Remember how that was taking off? Remember the whole, people got excited about China not too long ago? Where's Alibaba at? Oh, it's picking back up again. After, there has to be a good sentiment trader that isn't me to trade these things, because it's amazing. You start seeing it on Twitter. I really am starting to understand what people are talking about COPX, ticker symbol COPX. I'm looking at that. I probably should be bringing up on this screen so that way we could really participate in this together. But I failed you, so my apologies. From the peak, it's down 26.5%, and now it's bounced back 10%. So all these things get massively overdone. Just more volatility. If you believe copper in the next 2 or 3 or 5 years is going to go a lot higher in price from a shortage and the Bingham Canyon and all the Rick Rule things that people take and say for themselves and so on and so forth, then you buy it. And then you just hold it. And then maybe you add to a dip. I don't see what the big deal is, and people always have to talk about this or talk about that. That's a problem I have. Even though I'm a chatty person, I don't do exactly well with these weird virtual situations like just talking to a screen. And I kind of need people to interrupt me sometimes, even though I do enjoy my tangents. And just volatility, and then people saying a bunch of shit that is more often than not shit. Now you could say, hey, you can get 70% of your trades wrong as long as you make a boatload of money on the 30%, and fair enough. But then the problem is none of these people are showing any, vast majority of them aren't showing any sort of a track record or a performance or anything. And then there's like callable money. That's a fun one. And just imagine I want to compare myself to some fund manager out there, and let's say we have the same amount of money invested. Let's just say I have 100 million, they have 100 million, we're invested, okay, bam, we measure our returns. But now let's say I have 100 million invested, and then I also have, I don't know, let's say 20 million in T-bills. I'm not investing it. I'd like some cash on hand in case I, buy the dip opportunity arises or this or that, like whatever. Well, one of the things these fund managers do is that's why they return money back to the shareholders, is because it gives them better returns. And that's also why they have callable capital, is because it helps returns. Because guess what? If my $100 million of names is invested, gets a 10% return, I make 10% on that, but then I only made 5% on the cash. So that drags down my overall portfolio performance to less than 10%. And the other fund that I'm comparing myself to has everything invested, gets 10% back, so they make $10 million. And then that $20 million of callable capital is on the sidelines. So therefore, that doesn't have any return. It's as though it doesn't exist. And therefore, they can make their returns look higher than if they had that cash on hand. And same thing, they sell something, instead of keeping the cash in the portfolio, they return it back to the partners. And then guess what? That's not cash on them. So then the funds look better. It's like these lawyers who say we have a 100% success rate. They're manipulating things to make that a true statement. And right, wrong, or indifferent, you need to know these nuances and contexts because ultimately we're going to compare ourselves to other people, and that's important to know. So I guess to sum up today's thing, lots of volatility that doesn't really amount to much, and then a whole lot of that there just is a bunch of noise, and then a lot of people say a lot of noise out of their mouth in a volatile manner, in part because of the vast variance in the things they say. One moment they're calling for the collapse, the next moment they're saying, I should have bought the dip, and so on and so forth. So yeah, volatility and noise and nonsense, and keeping a close eye on people and watching their track record and examining them over time, because they're not going to remind you of when they screwed up, but you need to remember when they screwed up. That's the whole article I made about the Dunbar effect in Twitter. I'd recommend you go watch that video or read the article. And I think with that said, I've rambled on long enough. Thank you for watching, and until next time.